I sold my Rivian stock. Sometimes you're wrong. Sometimes you got to take the L. And let's be honest, I cashed out. I took a tiny position in Rivian a couple weeks ago at 15 a share. Sold today for like 11 a share. That is what it is. And I just wanted to jump in and tell y'all, I'll make a bigger episode of Gito and Millie explaining my full portfolio, but wanted to tell you, why did I sell Rivian? It starts out with the financials. You know, we've seen Rivian stock itself plummet since the IPO, now trading at $11 a share, only about 10 billion or so in market capitalization. Also, this is on Main Street data, by the way. They have an incredible platform. Use my referral code in the link and you can get 10% off your subscription forever. That's a super good deal, so use my link below. But anyway, what is happening here? Yes, I thought I was buying low at Rivian, but the bottom line is they have not put up the financials necessary to become the company that they need to be. And I just want to jump right into that. I think there could still be a lot of downside in the stock, basically coming out to the fact that I think Rivian needs to do a capital raise. I think Rivian's going to need to get more money in the door to launch their next products. And I don't know if that's a strong sell because they haven't been able to make money on their top tier R1T and R1S. So, and Tesla did. So I'm going to compare them to Tesla later, but this is why I'm selling Rivian. In short, we wanted this to turn the corner. Operating income to start improving. Gross profit to start improving. The bottom line is Rivian lost $606 million in negative gross profit on $1.32 billion in revenue. Rivian is losing $43,000 per car. That's up from $30,000 last quarter. $40,000 per car. So how are you going to make a car for... And so their whole thing now is the R2. Rivian has placed their bets on the R2, this new, cheaper $45,000 car that comes out in 2 years. They have 60,000 reservations. Well, I was at the event. I think it's a super cool car, amazing potential to do well. But how are you going to sell a car for $45,000 and make a profit if you're selling cars right now for $90,000, but you're losing $45,000 on every car? That's $130,000 to build a car. How the hell are you going to get costs down to make a profit on the $45,000 car? Sorry, but I'm not buying it right now. I haven't seen enough improvement in Rivian's financials. I mean, the company lost $1.6 billion on $1.32 billion in revenue. So for every dollar in revenue that came in, they lost more than $1. And this is really the tricky point. Rivian is walking an insane tightrope right now. Free cash flow, negative $1.4 billion in a single quarter. Now let's see how much Rivian has left in cash. So if we pull up Rivian's Q4 shareholder letter, let's take a look at how much cash they have. $9.4 billion in cash as the end of 2023. They do have $10.5 billion in liquidity if you assume they could take on some more debt. Free cash flow last year was negative $6 billion, and it was negative $6.4 billion in 2022. So they lost $5.9 billion in 2023. They only have $9.3 billion left. So any way you do the math, Rivian has about 6 to 8 quarters of cash left at their current burn rate. So 6 to 8 quarters is 1.5 years to 2 years. They're not planning to launch the R2 for another 2 years. So Rivian, at their current run rate, is going to run out of cash before they can even launch the R2. They have no guap. So this is the real big issue of Rivian is, and they're in this catch-22 because it's like you're burning $1.4 billion a quarter, but you also need to invest massive CapEx into getting your R2 off the ground. And they just did announce, oh, we're going to build the R2 at our current factory. We're going to pause expansion. We're going to save all this money, kind of. But I think that means you're pushing back the delay of the big factory. Your total production to hit 500 or 200,000 units a year to make a ton of money got delayed because now you're squeezing everything at the same factory because your demand for the R1S and R1T is going down. So that's where I think Rivian is in this insanely tricky situation of you're already losing $1.4 billion a quarter. You just guided for flat deliveries. So everyone was expecting Rivian to show all this monster growth, but the problem is their deliveries are flat. This is no longer a growth company. Production's going up, but deliveries have been going down and are basically going to stay at this level for a full year. And I think that might be too bullish because Rivian, everyone who's going to buy the R1 would be like, wait, I should just buy the R2 now. So I think there's going to be a massive Osborne effect where a lot of people who want to buy the R1S and R1T say, wait, I could get a better car. It looks like Rivian has a lot of better features in the R2, just as much range, more convenient, better built for half the price or less than half the price. So why would anyone buy a Rivian right now? So you have 2 years where sales are going to get hurt because everyone's waiting to buy your future product. At the same time, I've been seeing ads on my Instagram feed. Tesla hits $100 billion in revenue, 0 ads. Rivian is delivering 50,000 cars a year, and now they're pouring money into ads. I'm seeing leasing ads for the R1S on my Instagram feed. I'm seeing Instagram ads for the R2 to pump up the reservation number, because that's Rivian's scheme here, is they need to say, look how many reservations we have for the R2. And watch this. So if we go to X here, we can actually see that CEO RJ Scaringe was hyping up 68,000 R2 reservations in 24 hours. For context, the Model 3 did about 200,000. So I think this is weak, and Rivian wants to pump this number up, because if you're selling investors, you are telling them everything counts on the R2. Okay, we can't make money now, but we're going to make money on the R2. Look how much demand there is. Look how many we can sell. The problem is this number is too low. This needs to be 150,000, 200,000 at least for them to justify, they can't make money on 68,000. They had 100,000 plus reservations for the R1T, but then demand stalled out at 50. So it seems like a good number, but it's a weak number. And that's why the company is paying to take out Instagram ads to push the R2, because they're not getting enough reservations that will justify them bringing a few billion in the door. So when you go to Rivian, that's why the stock is falling. That's why there's all this pressure on the stock. And I love a quote from my friend Jay Filchi: just because it's a great product doesn't mean it's a great business. The Rivian brand is insane. Amazing reviews from customers. I love the product. I love the niche. I think they're onto something big. I think the vibe at the Rivian store is on point. Just everything about Rivian goes hard, but that doesn't mean it's a good business. They have not been able to make money. I mean, it doesn't get any uglier than this. And everyone's talking about, oh, well, what's the next Tesla? The next Tesla, the next great investment is not going to be an electric car company. If anything, Tesla has shown us how hard the car business is. Why are you valuing Rivian at such a high valuation? Is this a business you want to own? Burning $1.5 billion a quarter? No chance. No chance this is a good business. We're talking about the biggest improvement you've ever seen to get to break even, not to be making hella money. Rivian is so far away from making $1 that is why the stock is going down, because everyone's saying, guess what? You're worth $11 billion here, but you have $9 or $8 billion in cash as of today. We're basically valuing you at net cash, because we know you're going to burn through that cash instantly and have to dilute. The market is telling you that Rivian is going to have to sell more stock, dilute its shareholders, and get more capital throughout the door. So this is the really tricky spot Rivian's in right now, is they wanted to hype up R2 to get people excited about the future, but then at the same time, that's going to crush their current sales, which could start to look even worse than this. And in the meantime, cash burn could go up. And what do you do? And so you got to convince investors to give you more money. So I just don't know if that's going to happen. I think we're at the cusp of being diluted as Rivian shareholders. And that's why I got scared. And the other thing is, I took a step back and said, wait, go to Tesla. So this is Rivian's gross margin. You can see they've never had a positive gross margin. It's hard to even see how negative it is because it was so bad at first, but negative 46% gross margin, negative 35%. That was the best they had, was negative 35% gross margin as they're fully ramping their R1S and R1T. So you're saying like, well, Tesla lost money in the early days, blah, blah, blah. Tesla lost money in the early days. Well, let's look at Tesla. Tesla had positive gross margin. Tesla's gross margin, when they did the S and X, let's zoom way out to this. Tesla's gross margin, first of all, has never been below negative 17%. Tesla in its entire history has never posted a quarter even half as bad as Rivian's best quarter ever. Rivian's best quarter ever, negative 36% gross margin. Tesla's worst quarter ever, negative 17%. So this is, by definition, a crappy business. They are way too bloated. They're way crappier at generating a profit per vehicle than Tesla. This is just the facts. Tesla, this was negative 17% was the first quarter they launched Model S. You can see within one quarter, they get to positive 8% gross margin. Rivian is 8 quarters in to their launch of a vehicle, and we have still not seen a positive gross margin. Look at this. This is Rivian's gross profit. Negative every single quarter. Tesla, 1 quarter after introducing the Model S, went profitable. That's why investors gave them more money for the Model 3, because they showed they can make profits and cash flow and positive gross margin on the S and X, their premium top-line vehicles. And investor says, okay, we'll give you more money for the Model 3. Next phase of investment. Rivian has skipped that. Rivian has skipped showing investors it can make money on its first products. They've given up on that and is moving straight to the R2. That is why I don't want to own Rivian stock, because they have not shown the ability to be a business, to make money on the thing they sell. And it's a great product, and I love the company, and I think they're onto something big with their brand. But at the end of the day, Rivian stock is at the cusp of potential significant dilution because they need more capital in the door. You have 2 years where they have no new vehicles coming out, and I don't know, that's just going to be an ugly time to hold the stock, and you're basically praying with a Hail Mary that they can make money on the R2 at $45,000 when They can't even make money selling a car for $100,000. So I don't want to hold the stock for 2 years thinking they're going to make money on just praying they're going to launch the R2, survive till then, not dilute me too much, and then actually come out of nowhere and make money on it. Sorry, I'm not buying it. And so I love Rivian, amazing product, but not a great business right now. There's no way to slice it. It's going to be an extremely difficult road ahead. I think this is one of the most fascinating case studies to follow. I took a tiny toe in the water position at $15 a share. It burned me. I'm out. I lost $140 in G2 Milli. It is what it is. I'll take my L. I'll take my lessons, but I don't want to be a shareholder now. And if anything, that was falling right when it IPO'd. It was a joke about how overhyped it was at 100. I said a $420 price target. I don't know why I got ahead of myself and didn't stick to that, because I am holding that 420 price target. I still think is the way to go. I think Rivian is going to have to dilute, get more capital in the door. The stock's going to go down to about $4, and then they'll have a chance at recovering. But that's just a fantasy la la land. The point is, I just think it's super simple. If you can't make money selling a car for $100,000, how are you going to sell the same thing for $45,000 to make a profit? How are you going to convince investors to give you billions of dollars without proof of profitability on the R1T and S? I just don't think it's going to happen. So anyway, would love to know what you think. I would love to hear from Rivian if they ever wanted to hit me back. RJ said he was going to do an interview with me, but didn't. So we'll see if that ever happens. But anyway, this is HyperChange. Let me know what you think in the comments below. Let's keep scheming on Rivian. But for now, not a shareholder anymore. Wishing them the best of luck. See you all next time. Peace.